Why invest in the Nabo US dollar funds? My name is Charles Miano, Senior Investment Analyst, Nabo Capital. Nabo Capital offers a variety of USD products, including the US dollar money market fund, the US dollar fixed income fund, the equity fund, as well as the balance fund. For this particular video, we'll be focusing on the US dollar money market fund and the US dollar fixed income fund. First off, the US dollar money market fund is an ideal fund for investors who are looking to invest in the short term. So short term between less than 1 year in particular. So if you're an investor who's keen on making returns for a short period of time because you need to liquidate your funds over that 1 year period, then the money market fund fits you quite well. If you're looking to invest over a longer period of time or a longer horizon, that is 1 year and above, then the most ideal fund for you will be the US dollar fixed income fund. And all of them do offer varying returns that Nabo Capital offers. As we note in this particular Kenyan market, there are very few US dollar funds, particularly the ones that are registered or licensed by the Nairobi Securities Exchange, and we do offer competitive returns, particularly better than what would be offered in a bank. So just to give you a practical example of how much you will earn if say you invest in the US dollar fixed income fund for a 10-year and 20-year period versus what you will earn in the same period if in a bank account. So if we start off with that $10,000 and you invest the $10,000 and then you have a monthly, then you inject $500 every month. So start off with $1,000 at the beginning of the year, and then you put in $500 every month for a period of 10 years. In the USD Nabo fixed income fund, you'll earn a return of about $85,496 over that 10-year period. And if comparing that to what you would earn if you'd done the same thing where you invested $10,000 at the initial period, then did top-ups of $500 every month for that 10-year period, for the bank account you'd earn $73,366. So that's a difference of $12,130. And to give it context, in Kenya shilling, that's a difference of 1.3 million shillings. So you'd lose out 1.3 million shillings by investing in a bank compared to, for example, in investing in the Nabo fixed income fund. And looking now at an even longer investment period of 20 years, investing $10,000, topping up $500 every month, you would earn $188,345. With a bank account or a bank deposit, you'd earn $140,573. So, and the difference between those returns will be $47,772. And to give it further context, the difference would be 5.25 million. So that's a great significant difference between what you'd earn with a Nabo fixed income fund relative to a bank deposit. The difference would be 5.25 million shillings. So that gives you context in why an investor would prefer, and it will be most ideal and what we recommend for investors who want to invest in the USD. And another key benefit for investing, particularly in our funds, is not only the competitive returns, but also what the diversification that it offers you as a client, as well as the income benefit. So you're able to earn returns on a regular basis, particularly if you are an investor who wants a monthly return or a quarterly or an annual return. You're able to earn that return, and also it protects you against fluctuations in currency. So a key thing that investors are always worried about is what happens when the currency moves significantly or drastically, as we've seen during the COVID-19 pandemic. Holding the US dollar protects you significantly, given that the US dollar is seen as the stronger currency and the main currency or the main global currency within the world. So during this particular panic period, and we expect that to remain a fairly volatile environment, at least until the vaccine is released. Therefore, during that period, you're better off holding the US dollar, which protects you against any currency movements. So we highly recommend looking at our funds, given that you will earn a very high competitive return relative to what you'd earn in a bank. Second thing, you are able to earn on a regular basis an income or a return in that particular sense, and also you're able to protect yourself through diversification and protect yourself against foreign currency risk. And the last one is also protecting your capital, in that it is very key that our funds protect your capital or your initial investment, and that you're earning a compounded return that grows over time. So those are the key benefits that you'd earn if you're a money market fund investor who looks at short-term investments, and whether you're a USD fixed income fund or an investor in the USD fixed income fund who wants to earn over a long period of time. And finally, just touching on what we invest within in those particular funds. For the USD money market fund, we invest in short-term instruments. This include deposits. We also look at corporate bonds, as well as Euro bonds, as well as government bonds, which are varied across different countries. However, we focus particularly on bonds and T-bills, which are below 1 year. So short term, just below 1 year, in order to maintain the liquidity you need as an investor, and to meet the regulations, given that we are a licensed investment manager. When it comes to the US dollar fixed income fund, we invest in a variety of assets, including USD deposits. We also invest in Euro bonds. We invest in USD corporate bonds, USD commercial papers, and USD government bonds across different countries within Africa. And given we are able to invest for many years, we can invest across a very longer sort of tenor on those bonds and earn you the best return in the market. So those are the sort of assets that we invested in those particular funds. Join us in the next video as we address the question, why are USD rates lower than Kenyan rates?